Good morning and welcome to the Trading Wife Stock Market Chat, where we talk about all things stocks and stock market. And I want to thank once again BTFD TV, who is graciously offering this venue for me to be able to do this, and it's great to be here. Okay, so Sorry, I'm having some technical difficulties, of course, here, and I need to do something here to do. Oh, that's what I need to do. Okay, so here we are, and I want to go ahead and take a look at some charts. Let's get started. Obviously, we've had some nice bullish moves in the last couple of days, and some good news worldwide that has helped. This ceasefire in the Ukraine is kind of amazing, and some deals that were made yesterday with Greece, or agreed to make somebody agreed to somebody to make a deal, and there's some good news that's helping things out here. So I'm going to go ahead and go to the charts, which I think you can see there now, right? So I've got TLT up there, which our chat member Raj had brought up earlier. A very, very telling and interesting chart here, because clearly there's a doji right there that stopped right on the 200-day, that blue line, I'm sorry, the 50-day moving average. That dark blue line there is the 50-day simple moving average. And there's a doji that stopped right there, followed by today's candle, which currently is a bullish engulfing. So this is potential for showing a bottom here. It still has some work to do. The red line there, that's the ADMA. That's my trigger line for those of you who don't remember. Basically, stocks tend to go up when above the ADMA and tend to go down when below the ADMA. So buy signals for me need to be above the ADMA, and sell signals are either a candle sell signal and or when it is closing below the ADMA. This was something that was discovered by Rick Sadler, who was a student of Stephen Bigelow's at the time. They both use this 8-day exponential moving average as their trigger lines as well, so that's why we call it the T line. T for trigger. And I started incorporating it because it's a brilliant tool, and I think it's a great tool for everyone who is trading stocks or who has ever considered trading stocks, even if you're looking at fundamentals, to know when to get in and out, even if you're looking at longer term, because you can put this on a weekly chart as well. And it will work on the weekly chart as well if you're trading long term on fundamentals. So you can see there it started to drop below that 8-week exponential moving average, but generally when it's above it, when it closes above it, it stays on the upside, and when it closes below it, that's when it's going to go down. At least in the interim, you know, it can get back up through it and keep going up again, but certainly in my experience, when a stock, I'm trying to see if I can, I need to make this a little smaller. Oh, there it goes. When a stock, come on, is below it, will tend to go down. I guess I'm having a hard time showing this. Oh, here we go. This is what I need to do. So here, for example, back in 2013, when TLT was in a downtrend, now keep in mind we're on the weekly chart here, but you can see when it closed below that weekly 8-day exponential, 8-week exponential moving average, that it continued lower until it got back above it. Now, sure, it can zigzag and give some head fakes in here, but pretty much once it gets back up through, it's telling you that it's getting close to getting back up to the upside. So TLT, very interesting chart, definitely worth watching here on the daily time frame with this clear support on the 50-day moving average. But I'd like to see that get through the ADMA first. Okay, I think you guys have forgotten once again that there is a delay. Okay, so let's see. These are some other stuff mentioned up here. STX for Raj. We're gonna do a Raj start to the morning here to the show. STX is looking good here, Raj. I don't see why you wouldn't buy that. It's okay to buy, I would say. Yesterday was probably a better entry because you have this sort of doji sandwich here. Let's get a little closer. There we go. Gosh, even 2 days ago, you have that doji sandwich right there, and then you have another one here. It's like a double. It's not a double doji sandwich. It's a back-to-back doji sandwich, which is kind of cool. And then you have this little gap up here, obviously staying above the 80 EMA. Looks like it's maybe finding some resistance at that 34 EMA. That's also a Rick Sadler moving average that he uses in his pinball setups, which is to say that it's going to go from the 80 EMA to the 34 EMA. But I think you still certainly have some room here to the 50. You have a little volume pocket. It's not huge, to about 63.45. I mean, the only problem I see with this is that you don't know how much of a move it's going to make because you have several places of resistance, you know, just 3-4% higher between the 50-day and that volume at price that's all in here. You can see all this. So it might churn through that. I know that you like the company from a fundamental perspective, and so that's, you just want to find entries at a low point. This is certainly an okay entry. You're not too far from the T line, in fact, not very far at all, so it's very easy to put a stop just below that. When you're doing this, when you're looking for an entry and looking for where to place a stop, take a look at what the chart does. So this one in particular, yes, it tends to go up when it's above the 80 EMA, and yes, it tends to go down when it's below the 80 EMA. But when it's going up, it tends to hug the 80 EMA pretty closely, as you can probably see here, and dip below it. So think about how much it dips below it and put your stop below that so that you give it that room to do what it does naturally. Let's see what we got out here. Kind of see the same thing out here. Not so much. It got really bullish out in October. But you can see, again, the red line is the 80 EMA. When it's above it, it goes up. When it's below it, it goes down. So it's above it. So it's likely to go up from here. And you don't have to place a very far away stop. So it's a small risk. And in fact, even if you're only looking to go to the 50-day moving average, your risk is half. So you're looking at currently at 61.44. The 8 EMA is at 60.39. So that's just over $1 risk. And the 50-day moving average is at 63.87. So it's, you know, over $2 in potential gain. So it's still a decent risk-reward ratio, even if it's not as much as I generally like to do. Okay, let me go back here and see if I can catch up. Let's go on to some of Sylvan's, JJ's requests. Ooh, this AMD is beauty. Beauty, beauty, beauty. Look at that. That's really nice. This is based on the idea of, there have been rumors that I think that these guys are going to get bought out, right? My husband, as some of you know, is a fundamental analyst, and he is quite specifically in the semiconductor industry, and he feels that this is going to be short-lived. So I think that, you know, the thing to say on something like this is trade it, don't own it. Don't get too married to it, because if this is all based on rumor, it could very easily just fall right back down. But from a charting perspective, this is a gorgeous chart. You see this big move that it made the day that news came out, and how it beautifully is consolidated and is still above the 80 EMA. So certainly it will likely go up from here to test this 200-day moving average. It looks like it was, you know, found resistance there on that first day that it made that big move up, but it was such a big move up that it needed to find resistance somewhere, so it could mean nothing. 344 potential gain on the 200-day moving average, $3 ADMA, so 10 cents risk for a 90-cent gain. That's really nice risk-reward ratio. Obviously, this is a really nice J hook in here. You can see it's coming off of an uptrend, and then it pulls back and consolidates, touches the ADMA here, and then starts to curve up. There's your J hook pattern setting up. G Pro. So this company, it's really funny because obviously our prominent member and exceptional trader, Goofy Golfa, keeps saying, it's a fad, it's a fad. I don't like G Pro, it's a fad. But as a skier and a scuba diver and all of the other fun stuff that I like to do, I see a lot of folks using these G Pro cameras, and they work great. I think they're very cool, and they seem to be coming out with more cool stuff on them. So I think that the G Pro certainly has a potential. Currently, it's in a downtrend. Obviously, you can see it's in a downtrend. It's spending most of its time below that ADMA, that red line. If we pull it out a little bit further, I mean, there's no question about it, right? That's a downtrend. If we look at it on the weekly, you know, it's a pretty young stock, so it only, you know, went public last summer, basically. So it hasn't been around for very long, and it's approaching its opening low prices. And I know that Gigi likes to say that sometimes they go back to the scene of the crime. Oh, excuse me. And may go back to that low there. It certainly is heading there. Clearly, this is a bearish chart currently. But this could find an area of support and bounce off of it. Just got to keep watching it. It could be shorted, but you figure it's going to follow this line down. You can see that it's got this trend line down. It's going to test this ADMA here. It's right there ready to test that ADMA. Whether it gets through or not is a question. If it tests it and then deflects, you could feasibly short it and keep taking it down. If it gets through that, you'll want to find some confirmation, because you'll see, if we get a little closer in here, it got through that. It got through there, you know, earlier this month, February 2nd, continued, and then started to fail, made it look like it was going to keep going, and just completely failed. So it never quite was able to hold above that ADMA, and now it's struggling a bit. EVC is another one that Sylvan has mentioned. This is clearly a nice looking chart. Can't enter it here. It's too far. Well, it's not that bad, actually. The ADMA is at 682. It looks like it's further than it is for a $7 stock. $7.24. ADMA is at 682, so you're looking at a 42-cent drop, which is just over 5%. You know, you could take a half a position if you really, really liked it. Obviously, it's got a bullish trajectory going here. Let's pull back on this and take a better look at that. Oh, that's a nice looking pattern here. You have this sort of W pattern in here. This is a nice looking chart. It will probably come up and test this high here, which was, come on. Oh, what are you doing? 772. It's not a huge move up. It looks like it moves, you know, it's for a fairly low priced stock. It doesn't move that much. Going to 777, you're looking at a, you know, 53-cent gain, 3 cent, 4 cent, whatever gain from 723, and you're looking at that 40-cent loss. So that's not a great risk reward, but it's a nice looking chart, so it's worth watching. If it comes back down to that ADMA, maybe it could be entered. If it was entered yesterday as it was bouncing off that ADMA, that would have been probably a decent spot to get in. Let's take a look, because you had that hammer the day before and then that bullish engulfing, making it a left-right combo. Certainly that could have been entered yesterday, and it was much closer to the ADMA, giving you a better risk-reward ratio. Let's see what else we got here. Okay, come on, mouse. Work. Here, I'll tell you what. I'm going to go back to me. Well, maybe that's not a good idea. I'm I'm not sure what to do. STMP. Okay, I'm just going through the list here for you guys and all of these tickers that you guys have put up. So STMP, yeah, that's a nice breakout. Interesting, low volume, but sideways, and boom. Let's see, what is the volume here? Oops. Ooh, very low volume at 100 and something. I mean, my thoughts are that there's nothing, you know, it's fun to watch, but you can't trade this. You know, it's a $55 stock, so maybe that's not that low a volume. But look, back in October, it was under 100K and even lower. I wouldn't trade this. I also hate this company because I actually joined for a very short while and I thought they sucked. So they charge you so much money. I was stunned. I'd much rather just go onto the regular post office and print out envelopes. You can do that. You can get on USPS online and buy postage online directly from the post office, and it'll cost a lot less money. I think this is a joke, honestly. But it's the chart, all in all, without thinking of the volume and so forth. I mean, this is a nice chart. You can see that it took a nice big move up, rallied, and consolidated beautifully, and gave a little curve here, and let all of these moving averages come in together and bunch together. And then as it got closer, that ADMA crossed up over the, come here. It crossed up over the 50 yesterday. So that's kind of a hint to get in when you see that ADMA cross up over. You see all these bunched EMAs, you see all these dojis in here, and that crossed up over the ADMA. Obviously, if you'd bought it there, you'd catch that boom. I'm assuming this is earnings or something, though, right? Okay, William would like to see Depot. Depot. It is a drug stock. I tend to stay away from the drug stocks. They kind of make me uncomfortable, and so I don't play them very well. Or very often because although they've clearly been, doing really well the last year, and everybody has talked about how biotech has done really well, but I still will tend to stay away from drug stocks simply because they're so volatile. But this is a beautiful chart here. You have a nice uptrend, and then you have this nice big J hook in here, and it's pulled back a little bit today after going through the ADMA. These are bullish candles in here. You have these dojis, and then you have this nice move higher and a confirmation of that. This pulled back a little bit, touched the ADMA, and then bounced off of that. So almost touched, not quite, but almost. So that's certainly a nice looking chart. Volume wise, it's okay. Yeah, it's an okay chart. Promote your site. Tell people what you do and how to get in. Oh, absolutely right. So I never think to do this. Okay, good time to go back to myself. Hi, do you see me again? It's me. So one of our esteemed members who's been I've been working with for a couple of years, I think like 3 years actually, Coach has reminded me that I should tell you guys about my site and how to get in. So it's thetradingwife.net. All one word, no spaces, thetradingwife.net. I think it says on there the Trading Wife on the top of my. I suppose I should put thetradingwife.net on the BTFD logo so that when you get on, you can see that that's my website. So BTFD.net. I'm sorry, thetradingwife.net. We're on BTFD TV, and that's where I do my blog. I'm not blogging as much as I used to. I'm finding it harder to do it on the West Coast because I'm up so early in the morning, and I've been communicating with my members, my subscribers, by email. So a lot. I communicate with them daily by email and in the chat room, and then I'll put up a couple of blogs a week, including this show that is going to be videoed, and I will put this onto my blog so that you all can come onto my blog and see it as often as you'd like. So if you have any questions, you can send me an email at thetradingwife@gmail.com. That's thetradingwife gmail.com. That address is also on my website, thetradingwife.net. And of course, you can follow me on Twitter at thetradingwife, and I put out a couple things a week on Twitter as well, and some links to my blog and some charts and so forth. If you'd like to join, please do so. We have a free 2-week trial at all times that's going. If you get onto my site, thetradingwife.net, you will find the Join Me tab, and that if you sign up, you automatically get a 2-week free trial. You can decide from there if you'd like to stay on. As long as you cancel within those 2 weeks, you won't pay any money. So, but we have a great group of folks in the chat room, and I have even more who don't come in the chat room and just communicate by email. I do have a contract with Global Trading, so I have some members who are doing that with me as well. And so there's lots of options we can talk about. I do some private mentoring as well, so if you're interested in some private one-on-one time, that's something that we can negotiate and discuss also. Let's get back to the stocks in the market. So I'm going to go back to the charts and see, okay, where are we next? Let's see, AAPP for Lance. Woof! Well, that doesn't look very nice. This is a short, really. You figure it's going to come down to. I'm assuming this is an earnings miss, probably likely to come down to this support down here around 147. That's a fairly decent move. $7 on 154. I mean, it's 5%, but on a large stock like this, a higher price stock like this, sometimes you get smaller moves. The T line is at 159.19, so it's risk $5 at this point to make 7. It might come down to all the way to the 200-day moving average, which is the light blue line down here. Let's see how often it does that. It's hard to say. Obviously, this is not a chart that I would go long on. I'm not one to short, and I believe strongly in trading with the trend. So I will short on occasion when the market is in a downtrend overall, when it's distributive. Longs tend to work better when the market is supporting it, also accumulative, and shorts tend to work better when the market is supporting it. And is distributive. Obviously, there are times when stocks outperform or underperform what the market is doing. But on a general basis, the point is to keep the odds in your favor. The point for me is to keep the odds in my favor. So I like to stick with the trend. If I have what I call the market timer, and it's something that I got from a friend of mine that I've mentioned before, Spider Crusher, who is an excellent trader, and he came up with this idea for the market timer, and he created a software program that has certain criteria and gives him a green or red market timer. Unfortunately, he stopped sharing that with the world, so I started doing it on my own using all the tools at my disposal, and my timer turns green or red, and when my timer's green, I'll go long, and when my timer goes red, generally I'll stay on the sidelines. You could short if you're good at being fast and in and out of stocks quickly. Not my style. I'm a swing trader. I like to sit in stocks that are going my way and in the right direction, not one to get in and out. And also, overall, the market has been in an upward direction, even when it's pulling back and in an interim downtrend. We have not seen a true bear market for a few years. So something to keep in mind there. Currently, with something like AAP, you can watch it and see what it does tomorrow after this big move down, this big gap down, but this looks bearish to me right now, and the overall market is currently bullish, so I would just sort of stay away from it. That's my opinion. UNP, that's a beauty. Look at that. So a lot of these charts, I had been charting them over time, and so you'll see my old lines in here. Clearly this was a downtrend line, a resistant line that it had broken through, put in a little J hook, did it again here. It's starting to stair step up. You can see that this one dips right through the ADMA, the red line, in this case touched the 50, and did it again here. It didn't quite get to the 50 because it was crossed up over by shorter term moving averages. But all of these crosses here, the ADMA here over the 50, the 34, and then the 21 simple moving average over the 50 are all bullish moving average crosses. You have a clear line of resistance here. I bet you I can put a flat line here. Indeed. Look at that. So that's the line you want to get over for that breakout. But it certainly looks like it wants to do that. I think that it's worth entering here for good risk reward. Risk being $2 on a $123 stock, and I think that your potential reward is enormous. I mean, you're talking about new highs here in a railroad that is a staple of the country, and certainly it's good news for the economy when railroads are doing well. They're probably also doing well because of the lower price of oil. I know that recent rally in oil has taken a toll on the airlines. The airlines tend to be more volatile. But overall, I think that oil will stay down. It'll rally a little bit and it'll trade in a certain range, but it's not going to go back up to 100 anytime soon. I think it'll probably stay between 40 and 60 or so for a while. Maybe it'll even dip down into the 30s again because it had done that before. But this to me looks very bullish. Looking for that breakout. You have these nice patterns here, clearly bumping up against there. All of that moving average support. This is a buy here. You buy this, you put a stop below the ADMA, and you wait to see what it do. And it can be running to 140, 150. I think it can take a nice big move higher. TMUS, T-Mobile. This is my husband's phone company. I'm using Verizon, even though I hate them personally, but they are the only ones that work in a lot of California and in the mountains where we go skiing. So I have the Verizon and my husband has the T-Mobile. And he swears by it because they're fair and honest and give good pricing, etc. Again, a really nice looking chart here. You have this ADMA that crossed over the 200-day moving average. You have this dip below the ADMA and then this move back above it, and now it's just sort of riding above with these dojis. Very easy entry with the ADMA at 31.12 and the price currently at 31.59. Definitely looking for potentially much higher prices. Certainly can reach recent highs. 34.55 there. What's this one? 35.50. So, risking, what did I say? Risking 40, less than 40 cents, 38 cents to make $4. That's pretty decent risk reward. So I'd say this is a buy here. You could definitely buy this here. They probably give a divvy too. Do they give a divvy? I'm not sure. Verizon does. So I have Verizon long term. I figure if they're going to take my money, I might as well make some money off of them. So they pay a divvy, and at least I get that back, right? Okay, moving right along. Let's go to William. Has a few charts here he'd like to see. IDTI, also a good looker. William has returned to us after a almost 2-year hiatus, I believe, and it's great to have William back in the chat room. He adds so much. You have such a great eye, William, and you come up with such great ideas to look at, and I really, really appreciate that. It's really great to have you in the room. You're witty and fun and funny too, so that's all great. Currently at 2086 with a T-line at 2013, so that's less than 5%. It's a nice looking chart. It's not one of my favorites though. It just doesn't seem to, I don't know. It just doesn't strike me. I don't have a really good reason to tell you. because it's a nice looking chart. Putting in a doji today is almost starting to look like a gravestone doji, or probably a shooting star, because it's got that sort of gravestone look. Oh, I got something in my throat. I had a rehearsal last night, for those of you who don't know. I sing with a couple of bands, and often those rehearsals can go late, and these early mornings are tough. And I wake up with a little bit of a rough throat. Let's take a look at this Kate. I really like this Kate. This is a really, really nice looker here, William. Yesterday's candle was a left-right combo, or you could even call this a doji sandwich. You have that doji followed by the bullish engulfing, and you have this cross of the ADMA up over the 200-day. You have it confirming today. This is a buy. What does volume look like? Volume's great. Obviously, it's Kate Spade. Actually, wait, do I have my Kate Spade? I don't. my new purse is Kate Spade. It's blue, and it's really pretty, and it's a really cool color, and I like it. So this is a buy. You could buy this, $32.59. Yeah. You have a full 5% risk, something to keep in mind, but I think there's no reason to think that you can't get a full 10% gain over time. Above all moving averages, the 80 crossed up over that 200-day moving average. You're looking at previous swing high of 42.87. That's a nice big move. This is a buy. Also have this sort of, as you pull out, it's sort of got this sort of W look, so that's also a nice bullish pattern. Looking at this on the weekly, clearly I had charted this before, as we can see. Oops, and there's too much writing that's in there. Sorry about that. So looking at the weekly, this is also a really nice looker. I don't know why I have this line here. Clearly that was resistance at one point. A really nice looker on the weekly. You have this sort of W pattern, and look at that. It's just getting through the 50-day weekly moving average, and it's putting in a doji sandwich, left-right combo with the doji and the bullish engulfing. This is a great chart. This is a great, great chart. This is definitely a buy here. CZZ, another one. Yes, this is on the weekly, and the weekly looks nice. It's just pushing through that ADMA. Let's take a look. No, not the 3-day, the daily. Daily chart, wow. Yeah, this is a buy. Why wouldn't you buy this? You've got these dojis in here, sort of. You can't hardly see them because of all those moving averages that are all bunched in there. And this clearly has very, little volume. I mean, it has this volume that was coming down here, but it's not big volume at price. Easy move to the 200-day, which is at 1081. Great risk reward here. Oops, I keep doing that. Great risk reward here. 747 is your T line, 50-cent risk to make almost $3. That's a buy. Nice chart. Another nice chart. VJet. I saw this as well when you posted it earlier. Also excellent chart. You have this doji sandwich being confirmed, and again, volume pocket. These lines, these bars over here on the left-hand side, those are volume at price, which is to say that tells us how much volume there is in a specific price range. So buyers and sellers are coming in those prices. So you can see that this chart is churning a lot in this bar range. There's a lot of candles in here because that's where our buyers and sellers are. So there's a lot of volume in that price. Then you lose volume at price, quite especially when it was taking this big drop down, and you get some more volume at price up here where it was going sideways again when it was in a stronger area. So that's where your buyers and sellers are coming in. So in a perfect world, this is going to go to the top of this, which is about 1135, 1134 or so. So you figure it's going to go to 1134. Tough to enter, though, because your T line is more than 10% away. in these kinds of cases, when I tell people if they really want to get in, they can take a half a position, or they can wait for a pullback opportunity, what we call a PBO, see if it comes back to that ADMA. Or another option is to use the close, in this case, of the previous day, or the top of the body of the candle of the previous day, as a support area. But I would still only go half size in this case, just because it's so far from the T line. Okay, so I did STX. I hope you saw that. Good job, thank you. Anti-glare glasses. Oh, for goodness sakes. These are my cheap readers. All right, let's do this. There, now you can see my eyes. These are my cheap readers. I buy, let's see, I had a pair of prescription glasses, and those never last. I never seem to keep them. And literally my eye doctor said to me, they're just going to get worse. And it's all age-related, whatever they call that, reading eye problem. And so, like, he told me to go to the drugstore and just buy 15 pairs and put them around the house. So now I just constantly buy them, and they're all over the house, and they're my cheap readers, and I have all different kinds and colors, but none of them are anti-glare, I'm afraid. So maybe I need to work on that, find some anti-glare glasses. But I'm going to put them back on so that I can continue reading and seeing. And we'll go back to the charts. Aria for Coach. Aria. Ooh, look at that. This was on our, wasn't this on our tight J-hook scan? I believe so. So the tight J-hook scan, this has been a really fun new scan that I've added to TC2000 that Goofy Golfa got from another friend and shared with us in the chat room, and I'm pretty excited to have it because it's really giving some nice charts. I've never had a scan that had so many consistently nice charts. All of the scans I've had, I've been frustrated with them. J-hook scans, breakout scans. I've got so many scans that I've got in here. In fact, I can even show you that I have this huge list of different scans. And most of them don't give me much. The ones that are really precise don't work well, and so I tend to go with volume surge and minimum volume scans, and then just do an eye scan by using the slideshow tool, which is great because I see a lot of great charts by doing that. Here's that gene that Gigi was talking about this morning, and I believe he's in. So you can see a lot of good. There's the VJet. So a lot of these charts are coming up on just my minimum volume scan, and then I let it go through, and I eye scan them, and I look for the patterns and the right placement of price with MAs, etc., and the right direction of a chart. OAS looking nice here with this J-hook, with this doji bottom morning, well, not really a morning star, I guess, because it's not at the bottom of a trend, but certainly a doji bottom. So this is normally what I do, but we have gotten this new tight J-hook scan, and it just, almost every chart it puts out is viable. It's really beautiful. Starts with JZO and goes over. So I've got that slideshow running. I'm going to go back over here so that we can take a look at this Aria. It's a trader's best friend today. Trader's best friend is a term that was coined by Stephen Bigelow to denote a doji that's followed by a gap. So if it's a doji followed by a gap up, that's a bullish trader's best friend, and if it's a doji followed by a gap down, that's a bearish trader's best friend. Doji denotes indecision. The next candle gives you an idea of what that decision is going to be. So in this case, when it gaps in a direction after a doji, that can be very powerful. And Stephen Bigelow is teaching that to the world, that that's a trader's best friend, because they tend to continue in the direction that it gaps after a doji. So going back to the chart here, you can see that Aria has done that. It also has this 8 EMA cross over the 50-day moving average. Tons of support here. It's above all major moving averages. This is certainly a buy. You have a stop at the ADMA at 672, which is 15 cents on a $6 stock. Easy risk. Potential reward is, you know, first stop probably in this high area of 767. Already well over 10% potential even there. Could even go higher depending on, you know, how it's doing. But certainly this is a buy. You buy it here, you put that stop below that ADMA, and you ride it till you get a sell signal. Or, you know, if you hit 10%, you take half, or 15%, you take half, or a quarter, or a third, and then you let it keep riding unless you get a sell signal. But that's definitely a really nice buy signal there on ARIA, and easy to buy. Okay, Lance owns TMUS right on. MPEL keeps firing away. I know that we were watching that for a few days. It was looking really nice. I believe this was also on the tight J-hook scan a few days ago. Looks like it's heading for that 200-day. Can't be bought now, even though it's a bullish engulfing and it's certainly a bullish chart, but I wouldn't buy this here because of the placement of the ADMA and the 200-day moving average. But if we bought it when we, I think, first got it back, whenever it was, it made a nice move to there. You could have easily taken a nice ride. Okay, let's take a look at GG's Gene. I'm not sure when you got in this. I would say that the best entry was 2 days ago. Certainly yesterday could also have been entered as it tested again and bounced off the ADMA. Today was a little far for me all day to enter, so I'm not sure if you were already in this. I'm not sure how you're an exceptional trader, and I'm not sure how you decide on your risk profile, because I think sometimes you actually get into stuff like this here, right? When it's breaking out, maybe you use the breakout level. Well, that would make sense. You've got this breakout here, so you can use that breakout level as a stop, and that could have been bought today in that case as it was breaking out. Although, just a couple weeks ago, it had practically no volume. So I'm actually surprised, GG, because you used to be very adamant about stocks that had no volume, and except only in the last couple of weeks. Pretty anemic otherwise. Not really sure if maybe you've changed your criteria on that. Certainly, it's a great looking chart. One more, Oracle, ORCL. Yeah, that looks pretty good. Obviously, again, above these multiple moving averages that are all bunched together, the 34 EMA, the 50-day SMA, and the ADMA, and the 21-day simple moving averages. And these are the moving averages I use. You have the 200 in a straight line below. This has a nice curvy pattern, likely to get back up to this high here, 46.71 from 44. Could easily go higher, I think, from that. Risk is easy, 43.43 from 44. You're looking at less than 60 cents on it's 1.5% risk, and lots of potential reward here. So that's a really nice looking chart. I think that could definitely be tried and bought. Raj, did you not see me do STX? I'm going to actually type that into the so it will be on the video. It will be as I did it. But we'll take another quick peek. Microsoft has some work to do. This could just be a bull flag. Although it is through the ADMA, you could try it. It's hard to say what it's going to do here. It's just sort of riding this ADMA. So there's not really much conviction. Since the risk is so low, we're talking 23 cents on a $42 stock. It can easily be tried, maybe a half-size position, see where it goes from here. You're looking at 23 cents risk. If it goes to the 200-day, you've got, $1. You have a lot of moving averages up here. I think that there's certainly lack of volume at price here. Well, especially when there's a gap. When there's a gap, that's where you really lose your volume at price, because there's obviously no volume when there's a gap. And what happens is stocks will tend to whoosh from one side to another, like whoosh right through. G2 Toy, Ron Goat, who is also a prominent trader on the web, calls it a vacuum. So he likes to say that it's a vacuum from one side of that volume pocket to the other. He doesn't call it a volume pocket either. I can't remember exactly. I think he just calls it a vacuum. But he uses that indicator as well. So I don't know. I think I would just watch Microsoft for now. I don't think I would really do it. Taking a quick another look at STX. We did do this once. It can be bought. It's above the ADMA. It's not a huge risk. You have this very small volume pocket, and you have the 50-day moving average. So I don't know if it's going to find resistance there. I think that it certainly can get through all this stuff. Right now, it's not really doing much. Kind of like Microsoft, it has that sort of look that it could be a bear flag in there and not be ready. Although it did support nicely at the 200-day in here. Clearly, it had dropped through, found support, and then came back up and found support again at the $200-day simple moving average, and is now popped through the 8-day exponential moving average. But you do have this 50 up here. When we look at this on the weekly, which I think that we did earlier, so I'm just going to try and do this quickly. It looks pretty decent on the weekly, but again, it's below the 8-week exponential moving average. So that might be the bogey there. You might need that to get through that, and then you can look at these highs here. One of the things I said earlier is I believe that you like this from a fundamental perspective. You know the company, you really like the company, and so you're just looking for entries at fairly low numbers. In this case, it's certainly fairly easy risk here, so it's worth trying for a company that you believe in, and you can hold it as long as it stays above the ADMA. Quickly, I'd like to go over the markets. Here is the SPY. Now I have a lot of lines on this SPY. So there was this channel here that we had kind of this descending wedge that was zigzagging back and forth, and we have this a little bit longer term, this range that I've put this box in. And we have this box in here. The reason I'm not charting that spike there is because it's not on the S&P, and I think it's just a SPY anomaly. I don't think it's real. So I'm charting this from the top of these lines here, which makes a lot more sense to me. Clearly, we are right there at the top of the range. So as I said yesterday, we need to see if we get through here. There's good reason to believe that we will get through here, because these are all very bullish candles. Obviously, we broke this downtrend in here. And 2 days ago, we had a trader's best friend. And so we've confirmed that twice now, 2 days in a row. So very, very good likelihood that we're going to pop up through there and start continuing higher, make new highs, running up the top of this longer-term channel in the SPY, which is still in an uptrend. Come on, go to the weekly. That'll help. I'm sorry, I got all this stuff in here. Why won't you move? See if we can delete that. Okay, there we go. But you can see that it's, it's in an uptrend overall. Still, you have not broken this uptrend. Oh, this is just a terrible chart because I've got so much stuff on it. So let's, you know what, I'm going to go ahead and go to the S&P. But you can see that this is in an uptrend. It's staying in an uptrend. Let's look at it from SPX, the S&P, because I don't have as much drawn on the S&P. And here's the weekly. I guess I do have a lot drawn on the S&P still. Point is, guess what? It's in an uptrend. It's still in an uptrend. It hasn't lost its uptrend. Lots of folks, doom and gloom, doom and gloom. Market's going to collapse. There's so many reasons to think so. Oh, we're all sure. Oh, it's a bear market. It has not been a bear market. We have not seen a bear market. in years. 2011, maybe a little bit. Prior to that, 2008. But this is still in an uptrend from the 2009 bottom. And there is no denying that it is still in this uptrend channel. So all these folks that every time we have a little pullback start saying, oh my God, it's going to be a bear market now. It's just not. People were freaking out during this, saying, oh, this is definitely a top. It's just making, you know, lower highs. It's not going to make any higher highs. And then what do we have here? Look, it broke that trend line down. So there was nothing that told me yet that it was going to go down, and I kept saying that, you know, certainly there's a consolidative phase, certainly there's interim downtrends. My timer went red, then green, then red, then green, then red again, then green again, and I trust it because sometimes markets are choppy, sometimes, you know, there's been a lot of volatility, which you can see in that chop. And that's not been helpful for my volatility trade, which is finally moving in the right direction again today. So I'd like for that to get at least to a point where I can get out of it or out of most of it. Volatility does always eventually collapse. It can stay on for a year, maybe even, well, maybe not 2 years, year and a half. I've never seen much more than about a year and a half. So that's a long time to be patient and a long time to wait. But I see no reason to lose money on it. There's nothing. It's not like I'm using all of my cash at this point. So I might as well just wait until it comes back. And I'm fairly confident that it's going to do that. And it's certainly doing it today. So that's helpful. But this wasn't even as bad of a pullback in here. It hasn't been as bad of a pullback as it was in October. And of course, everybody was doom and gloom in October as well. So that's just how the market moves. It zigs and zags. It goes up and down. It waxes and wanes. And in an overall, you know, Dow theory tells us that there's an overall trend, and then there are smaller trends within it. You see that. The overall trend is up, and then you have these smaller zigzag trends within it. So we trade those smaller trends, but we also know that the overall trend is up, and there's no reason to get fully bearish on the market, especially when downtrends tend to last much shorter length of time than uptrends. When we go up, obviously there's been a lot of chop in here, but generally we get 6 to 8 weeks of uptrend when we have uptrend, as opposed to this downtrend, which happened in about 2 weeks. So something to keep in mind there. If you're good at shorting when it's truly in a downtrend, absolutely you can do that. Just remember to keep them short. Don't hold those. You don't want to hold those a very long time because bottoms tend to happen. After all, stocks were originally set up for people to invest in companies. The idea was to invest in a company that was going to grow and the stock was going to go up over time. It wasn't so that we could short stocks. That's something that happened later and is more akin to gambling. And of course, you have all these famous doom and gloomers out there who love to say that the market's always going to tumble and crash. And they're right about once every, few years, 8 to 10 years. Actually, big-time crashes like 2008 don't happen that often, but we do have these pullbacks, obviously. But nonetheless, you can't deny that the overall trend is up in these markets. But looking at also, let's try to get back onto the weekly. Okay, why won't you change to the weekly? What is wrong with you? Let's try to go back to the daily, and then we'll go back to the weekly. There we go. I mean, how can you deny that? It's 2009. It's in an uptrend. It made bigger moves. It has consolidating that uptrend. It might at some point find a top and take a true move down, but not yet. So when it does, we'll notice, because you can see that, when this really started to go down, it lost the 8-week exponential moving average. I'm sure it probably lost the 8-month exponential moving average. This is a clear, downtrend over a year and a half's time. There's no denying that. We don't see anything like that. We haven't seen anything like that. Again, I'll say that the closest thing we saw was in 2011, and you can see even that is still an uptrend in the overall interim of things. But that was a bit difficult to hold long in that stretch. So recognizing that 2011 phase was fairly large move down. But generally, It's in an uptrend. This is the diamond, by the way, the DIA, which is the Dow version of SPY. Let's take a look at the other indices. The IWM, this is small caps. This also, folks were saying this is underperformed. It's done a lot more sideways action. You can see that on this weekly chart here. It's had trouble getting up through that resistance level, but this is a nice looking chart at this point on this weekly. I'm seeing a little inverted head and shoulders. Let's take some of these lines out. Are you all seeing this here? Look, here's your head, right? Little head. Here's your right shoulder. Here's your left shoulder. That's your neckline. This is a little inverted head and shoulders. So just looking for that breakout there. I think that can easily happen in the coming weeks, maybe even days. Let's see. Yeah, it's not that far from it, right? And on the daily chart, this IWM is, again, a trader's best friend. You have the doji with the gap. Actually, it's a double doji, trader's best friend, because you have 2 days of doji and then that gap up. Going to the Qs, breakout. you can't deny these charts. They're bullish. So I can't be doom and gloom in this. XIV breaking its downtrend, holding that. This is my volatility trade. It's not been nice to me, but I still have faith that holding it will do me good in the long run. Okay, going to see quickly if there is any Gene buy the dip on the weekly. All right, let's see. That's the last one from Mr. Goofy Golf. Look at that candle today. That's just gorgeous. You are truly a king, sir. Oh, yeah, look at that. Oh, it had a split here. That's interesting. I just had no volume out here, and that really gives me the heebie-jeebies, you know. It could go back to that, right? Especially, too, is this not biotech stock, drug stock? What is this exactly? What do these guys do? Diversified services, research services, genetic technology. I mean, that to me sounds like biotech. Clear breakout, but again, I'm not crazy about that volume pattern, the way the volume was so low not too long ago. So again, lots of good charts here on this. This is that tight J-hook scan. I'll go ahead and refresh it, see if it comes up with anything new. There's just a lot of good looking charts in here. So I've been posting those in the room daily for our chat room members, and we've all been sort of enjoying the fruits of this excellent new scan that Gigi shared with us. So it's very cool. For those folks who have the TC2000 and are part of my trading service and come into the chat room, you all get this. You can have this scan to put into your own TC2000. Unfortunately, it doesn't work. Here, let me get back to him. Unfortunately, it doesn't work well I don't think it works at all in freestockcharts.com because they don't offer the ability to create your own conditions and create your own scan. They just have a few already set scans that you can use. And this does require being able to put the code in and create your own conditions and your own scan, which I believe only happens with the subscription-based services. The gold service is actually pretty reasonable. I think it's $29 a month or something like that, or you can buy it by the year for, I don't want to quote prices and be wrong, but I know that the 1-year price is cheaper than the monthly price. I think it's pretty reasonable. I have the platinum subscription. I like to have a lot of stuff. It gives me real time as well as volume intraday, which I really like having. But the gold service, it's not that it's all delayed, just some of the, depends on what the chart is. Some of them are on bats and on maybe delayed 15 minutes, whereas we have 100% real time on the platinum. But I still think it's worth having that gold, even with that delay, to be able to put in your own scans like this. These scans are, you know, working really, really well. This one especially. Ooh, look at IMAX. I just saw IMAX go by. I almost want to go back to the chart just to show you this IMAX because, oh, I have to go here. Do it here. As I'm watching, then this is the tight J-hook scan. This is the really nice scan, but as I'm watching them go by, I really, really like this IMAX chart here. That is so nice and curvy. And yes, as Gigi just mentioned a little bit ago in the chat room, we love curvy, especially when it comes to charts, because those tend to do really well. I mean, Mr. Bigelow says, observe the obvious. That's pretty obvious, right? Which way is it going? It's curving up. And it has clear resistance here. You've got a clear breakout level. I really like this chart. Okay, and on that note, oh, the buy the dip was in the SPY weekly. Gotcha. Okay, let me go back to that. I missed that. I apologize. Let me go ahead and take a quick look at that SPY weekly again, or I'm going to do the S&P weekly since I've got so much written on. Yes, indeed, buy the dip on the weekly, because you can see that since 2009, that has been a profitable trade for most folks. This is why the buy and hold folks have done well, because they, just buy and hold, and they pulled through those little zigzags. Market stocks don't move in a straight line. They zig, they zag, they wax, they wane, ebb and flow. It's all very, yin and yang. And so that's why the buy and hold folks have done so well. And clearly the buy the dip in the markets on the weekly charts have done folks pretty well. Okay, I think that's it for today. We had a nice long 1-hour webcast, and I thank you all for watching and for joining. This will be a video that I will send out to those members in email who couldn't come by, and also for you folks out there who aren't members of the service. It will be posted on my blog. It will be posted on Twitter. So hope you get something out of it, and please feel free again to send me any emails if you have any questions at thetradingwife@gmail.com, and my website, thetradingwife.net, and you can get on Twitter, it's just @thetradingwife. So again, thanks for watching. I think this was a really nice show. We're really enjoying the move in these markets these last couple of days, and again, I want to thank BTFD TV for offering me the opportunity to do these webcasts. This is really a great venue, and I really appreciate that. I think everybody's enjoying it. Have a great day, everyone. Oh, and the beat goes on. Okay. One last thing for Gigi. Drum beats pound and a rhythm to the brain. La-da-da-da-dee. La-da-da-da-da. And the beat goes on, and the beat goes on. All right, there you go, Gigi, just for you. All right, have a great day, everybody. Bye-bye.